Hi guys, welcome back to my YouTube channel. Now I'm going to discuss about discriminations in insurance. So keep watching my video till in discrimination insurance underwriting guidelines has given. Then guys, discrimination in insurance underwriting guidelines. The insurance industry uses underwriting guidelines to determine who they will insure and at what rate. Insurance deal in risk. So insurance companies create these guidelines to determine the circumstances under which they will assume at that risk and when they won't because some is too risky to insure. While insurance companies are prohibited from discriminating based on factors like race, guidelines use particular fact about people. While insurance companies are prohibited from discriminating based on factor like guidelines, use particular fact about people to ensure risk and set rates. This means that some form of discrimination is both necessary and legal. Still, question about what counts as fair or unfair discriminations have received increasing attention, especially since George Floyd's murder in 2020. Some key takeaways of discriminations in insurance underwriting guidelines. Insurance companies use underwriting guidelines to set rates and determine who they will insure. Companies set rates on risk and factor that they are allowed by law to consider, such as applicants' gender. While insurance company says that certain factors are actually sound, which criteria for setting rates, consumer advocates think companies should determine rates using factors that people can control. Historically, based insurance rules include redlining, restrict, sorry guys. Historical based insurance rules include redlining, restrict, covenant, race based insurance premiums, and what advocates call subtle proxies for unfair discrimination, such as using zip code and credit scores to price auto insurance. In recent years, regulators and members of the insurance industry have proposed policy to reduce discriminations. Existing discrimination, the National Association of Insurance Commissions (NAIC), full form is National Association of Insurance Commissioner, told is that standard setting organization for the insurance industry in response to the George Floyd protest. The NAIC held a special session on race to scrutinize the connections between insurance and racial discriminations. Though over racial discriminations has become less common, NAIC members said form of discrimination persists, especially in the use of big data. Moreover, as discussed below, lawsuits and investigations have alleged that long-standing discriminatory practice such as redlining and race-based premium continue to affect the industry. The categories presented here are not exhaustive. For example, health insurance has been another area of concern, particularly with federal rules. For example, the U.S. Center of Medicare and Medicaid Service released a final rule non-discrimination in health and health education program or activities in June 2020. The ruling was immediately criticized by California Insurance Commissioner Richardo Lara, among others, as a roadblock to healthcare access for LGBTQ plus people with disabilities and anyone whose primary language is not English. Type of discriminations underwriting guidelines rely on a form of discrimination based on risk profile. They separate people into high and low risk categories to determine premiums and coverage customer to reduce their risky behavior. Though this is considered acceptable, the history of underwriting is flush with unacceptable discrimination, something known as unfair discrimination. Under US law and under United States law, underwriting guidelines cannot use unfair discriminations. Unfair discrimination target protects class such as race, national origin, or religion. The discriminations form can vary, ranging from higher price and weaker policy to daily coverage. So thank you so much, guys. I hope you understand about discrimination in insurance underwriting guidelines. Thank you so much, guys, for watching my video till end.